Tesla sliding 10% today, a big part of that after the company's missed analyst expectations on earnings. So could the rest of the Magnificent Seven stocks be headed for a similar fate? Let's bring in CNBC contributor Malcolm Ethridge of CIC Wealth to weigh in on that. Good to see you, Malcolm.
Good to see you, too.
Now, Tesla, it's kind of its own beast, right? I mean, in terms of its business and the things it feeds off of. But I wonder how you think it fits into the outlook here for some of the other secular growers that have been carrying this market.
So I think now is when Tesla gets called an automotive company, an auto manufacturer. Again, and no longer a tech company, right? All of a sudden it became a tech company. I think it goes back. I think it's a big difference between Tesla, the manufactures a hard good, versus the rest of the mega cap tech companies that, I mean, shipping software, the margins on that doesn't take much, right? You jettison one project that's not working, the team that was working on it goes with it, all of a sudden your margins improve. Not as easy to do that with an automaker. And so I think Tesla is a little bit of an outlier, and we're seeing that with its share price versus the rest.
Okay, that's certainly a little bit comforting. You can kind of put that behind a bit of a firewall. But in terms of the other stocks, the more traditional ones, the Microsofts, Amazon, Alphabet, that is where the earnings estimates have been going up. So it's kind of been a reason for some of the stock strength. But what's your take on how they're positioned now?
I think they better bring it. I think we're going to get earnings from the majority of those names next week, right? And the market has been looking for a reason to bring those names back down to gravity. You've got a forward PE on the S&P at like 18, roughly 32 on average on those names. And so they better bring it to support that kind of a PE again and again, quarter after quarter. And I'm not so sure, just based on what we've been seeing so far, sentiment-wise, that the market's even going to reward them if they do have the goods. And earnings reports are favorable.
I mean, Netflix is obviously smaller. It's different as well. It's doing something, you know, it's subscription-based. It's direct to consumer. But the market was seemingly a little bit nervous ahead of that and did reward, you know, that stock. So the capacity's there, I guess, if they do have the numbers.
But Netflix, to me, is more of a story of the writer's strike for 6 months, right? On the network, the entire 6 months, we're talking about how they're the only option when you talk about fresh content, right? And so I think this is more of us just getting confirmation that they were the only good thing happening when it came to content. And we also are seeing like 2 million or so, 2.5 million additional subscribers that they got that they didn't expect. Almost 9 million new subscribers. Is that really sustainable for a company like Netflix going forward, right? I just don't think that the double-digit run-up in their share price is warranted when you consider the unlikeliness that that number repeats.
Among those names we mentioned that you did own, I mean, something like Alphabet, more like 20 times earnings, not 32, like you mentioned before. So does that seem to be in the reasonable zone, or how would you approach it? So
Alphabet, I'm a little bit more concerned of for a different reason, and it's more to do with their legal battles, right? I think that Alphabet is actually the one that Lena Khan's team actually can land a glove on if any of the mega cap techs that she's after, there's actually a shot. And so just the distraction that we know goes along with fighting off a court battle with the government makes me concerned that Google, Alphabet's going to be a little bit distracted and not on the right path for a while. But I definitely do think of them, Microsoft is probably the one that I'm most positive on, I'm most excited about, and I think will actually continue some growth trajectory going forward through this rough patch we're talking about, solely because in the AI battle, save for maybe NVIDIA, they're the only one likely to do really well and see profit from the AI wave near term, right? And so just based on their ownership stake in OpenAI and what's happening there, I think Microsoft is the one that can tell a compelling story regardless of what the macro environment is doing.
Yeah, folks made a fair bit of fuss this week on that report that Amazon was going to be, you know, getting some licenses for Microsoft Office 365. It's $1 billion over a few years. I mean, it's not a lot of money, but it would suggest that Microsoft as a franchise, you know, has something going for it here.
And for Amazon to concede, for Amazon to concede to Microsoft, their competitor in the cloud space, we can't necessarily do this without you. Also, Amazon had brought itself out as sort of the everything store for AI development, right? We want developers to come build on our chassis, and regardless of what you're building, we've got access to all the large language models. For them to concede that and have to go to Microsoft for help in that regard, that's a big deal, I think.
Yeah. You know, these stocks have also at times had the character of just, I want to buy a great balance sheet. It's not really about the business. It's not really about where earnings estimates are going. We may be in that mode right now or get there, but does 5% on the 10-year Treasury yield change the story in one direction or the other for these guys?
So maybe not an Apple, maybe not a Microsoft, right? Fortress balance sheets, like you said, tens of billions of dollars, on their balance sheets in cash, which obviously is going to help their earnings just on a net positive basis. But also those have been the safe haven trade all throughout this year, and I think the history is just going to repeat itself, where the trade has always been, we get into a little bit of a stumble, we're not so sure where to go in the market. The safe haven is Microsoft, the safe haven is Apple, and I think that's what traders will cling to once again until we inevitably rotate out of that mega cap tech trade, that I don't think we're there just yet.